My mission is simple, to help you protect your family and keep more of your money. I'm here to help level the playing field for families and those who seek the truth. There's always a new way to make money, but at the end of the day, it's your family's security and your legacy that matter. And I promise to help you protect what's really important to you. Legacy Money starts now.
All right. Hey guys, Barry Page here, Legacy Money, the show that helps you live more, give more, and leave more. Today, we're going to talk about banking, my favorite subject. The Federal Reserve, as you may know, Jay Powell met today. And from the minutes, the Fed forecasts stagflation, the headline for the Wall Street Journal. I don't know when this is going to end, but there's not a lot of positive things coming out of the Federal Reserve. Different recaps, say the Fed sees inflation coming down the road. The Fed is uncertain about things. Well, the only thing that's really uncertain that I can see is the Fed's stance on the money supply. Nobody knows. Have you noticed how the markets go up, they go down? And, everybody anticipates, is the Fed going to raise rates? Is the Fed going to lower rates? What are they going to do? And everything seems to revolve around that. I mean, all of the talk show pundits, they're on every news station. They're all making predictions. But what does it really mean? Have you ever really considered who's in control of your money and where does your money reside? See, most of us keep our money in the local bank so we can get it. It's liquid, right? If we're lucky, we have some liquid savings. Hopefully, you're saving money. But ultimately, when the money is in the bank is in control. The Federal Reserve is in control. From the moment that you make that deposit in your local bank or your online bank, they have control of it. They're going to lend it out. And when they lend it out, which that's fine for them to do, that's capitalism. But when they lend it out, they're actually lending out more than you have on deposit. And that's the fractional reserve system that we live under. But you don't have to live by bank rules. You can create your own system, your own bank, so you're in control of the money. I'd like to recommend that you go to our website, legacyinsuranceagency.com/IBC, and schedule a time to meet with me, and you can determine if infinite banking might be the way that you want to go. Because when you have your money stored in an account that you own and you control via contract, you can now utilize this source when you need access to capital. You don't have to borrow money from the banks or the financial institutions. And I don't know if you've tried to do that lately, uh, the hoops you may have had to jump through. But what if you could determine the terms of the loan yourself? What if you could borrow against your own collateral? That's right, your collateral in your own system with a contract that you own and control. It's all outlined in this book, Becoming Your Own Banker by Nelson Nash. I suggest you read it. You can get it from our website. Just go to the shop, or there'll be a link on that page there, legacyinsuranceagency.com/IBC. You'll be taken to a page where you can schedule a time to meet, and we'll go over your goals and see if this might be right for you and your family. But when you follow traditional banking rules set forward by the Federal Reserve, then you're under their system. You don't really have any choices. Your choices are to use their system. And you may say, well, I have liquid savings and I don't borrow money. I pay cash for things. Well, the first thing you must understand is that you finance everything that you buy. So when you spend money, you're either going to spend your money and that money will no longer earn a return for you because that money is gone. It's gone forever, right? If you borrow money from somebody else, the bank, the financial institutions, you're going to pay interest to them. So, very important that you just understand, get your arms around that concept that you finance everything that you buy. Now, back to the Fed a little bit here. And if we just want to talk about inflation, when you actually store your money with the banks, you are adding to inflation. I know that's hard to swallow, but the banks loan out more than you have on deposit again. So that additional money, where does it come from? Well, that is inflation. They've created this additional money via credit, and that's how they loan the money out. So you don't really have to be concerned about rates so much when you can control the account. You have access to the capital on your terms. It's only determined by how much you have in your account. So I often ask people, do you think you could ever have too much money in your own bank if it were your bank? And most people say no. Some people are alert today of saving money, with the banks, and they think about it that way. But if it were your bank, if you own the bank, if you own the contract, if you own the system that you could borrow from, right? If you had access to the capital on your terms, if you could use your capital as collateral, your money, right? And you could repay loans as you wished. That's what you can do with infinite banking concept. So we use a contract called dividend paying whole life insurance. And these contracts have been around for centuries. They've been used by wealthy individuals, they've been used by wealthy families, they've been used by corporations, they've been used by business owners all over. So if you own a business or if you've ever thought about starting your own business, you're going to need capital. You're going to need access to money. And again, it's not about the rates, it's about the volume that we pay, right? And so every time that we finance a vehicle, a car, we use our credit cards and we pay interest, we're paying that to someone else and that money will be gone forever. It's never going to fit into your system. So you don't have to worry so much about the Federal Reserve and whether or not they're going to raise rates or lower rates. The banks actually like it when the rates are low because they can turn their money more often with the lower rates. Now, just because the rates are low to them doesn't mean that they're going to charge you a low rate, as you've probably discovered if you've ever borrowed money, car loans. Maybe you have children. Maybe you want to send them to college someday. What if you could start a fund for them that you could contribute to? And whether or not they went to college or they started a business or they just got a job, you have access to the money on your terms. You don't have to deal with financial institutions and the lending process that we normally have to go through. So just think about it when you're borrowing money or when you're watching the Federal Reserve minutes or meetings, and all the news is about will they lower rates or raise rates. And you've got, the pundits out there talking about tariffs and what they're going to cost us. But they don't seem to talk too much about the inflation and who pays that. There's a lot of talk over the last couple of years because prices went up, but did the prices really go up, or did the value of our money go down because the increased money supply? The increased prices were just the results because the businesses, the people that sell the products, they had to raise their cost just to cover their expenses. So your dollars are losing value while they're in someone else's bank. And I just, have a question. Is that what you want? Do you want to have your money stored in somebody else's system, the Federal Reserve System, the banking system as we know it? You can escape this, right? And I'd recommend that you get a hold of this book, Becoming Your Own Banker, and just see what it's all about. You can get it on our website, legacyinsuranceagency.com. And you can schedule a time to meet with me, and I'll be glad to go over exactly how this could benefit you, how you can save money. Because most people, when they save money, they're not really saving money, they're investing money, and they're investing it in Wall Street and the markets, the financial institutions again. And this money is at risk. You're not really saving money. So that's really the big difference between saving and investing. Are you saving money safely? Do you have access to the money? Because if you have a 401k and IRA, you probably know you don't have access to the money until you're 59 and a half as of now, according to IRS rules. So you can save money in your own account with your own contract, and you can schedule a time to learn more right here at legacyinsuranceagency.com. Now, I do want to ask you, when Jay Powell speaks, do you listen, or do you pay attention? I don't know. Put it in the comments below. Just let me know. Do you keep up with the Federal Reserve meetings, and are you concerned about the Fed raising rates or lowering rates? Is it better if the Fed lowers rates? Who does that help, and who does it benefit? Does it benefit you? Because as I mentioned earlier, it's not really about the rates. It's about controlling and the volume that you will spend financing over your lifetime. So why not finance through a system that you can own, you can control, where you control the contract? So that's really all I had for you today. I appreciate you joining me, and you can always subscribe to this channel, Legacy Money on YouTube. And if you want to schedule time to learn more about infinite banking, do it here, legacyinsuranceagency.com/IBC. We've helped hundreds of people all over the United States. I'm primarily licensed. You have to be licensed to do this in the Southeast, but we work with other IBC practitioners across the country, so we can set you up with somebody in your locale. We can meet online. It's real simple. So just go there, schedule time, and I'll look forward to talking to you again real soon. And just think about it, where you store your money and how you can get off of the fractional reserve lending system. Have a great day.